Welcome to Business Talk here on Business Tech with me, Michael Avery. And what a year it's been. Certainly a roller coaster of a year in crypto land. We saw a massive sell-off in Bitcoin over the weekend and Ether too. And I think that sparked a lot of fear in cryptos. But things have bounced back sharply this week. I think Bitcoin's year-to-date return has narrowed relative to the S&P 500 and the JSE All-Share over the past month. But still, despite the recent sell-off, Bitcoin up around 75%. Compared with a roughly 22% return in the S&P 500 and roughly 23% of the JSE All-Share, and a 34% return in the Thomson Reuters Core Commodity CRB Index so far this year. So it just shows you, even with the volatility, just how much cryptos have returned. And it's always a great pleasure to talk to the man who's got his finger on the pulse when it comes to cryptos, Sean Sanders, CEO and founder of Revix. Sean, white knuckle stuff. Great to have you back on the show. But what happened with Bitcoin and the overall crypto market over the weekend? I'm struggling to see what really drove the sell-off.
Hey, Michael. Thanks very much for having me again. I think a lot of fund managers are scratching their heads saying what on earth happened on Saturday last week. I mean, we saw a close to 25% sell-off across the entire crypto market. Nearly $300 billion with a B was wiped out of the crypto market in a matter of hours. In fact, the entire collapse actually happened over a single candle over a 1 hour period. So, I mean, a brutal sell-off. And I don't really have a single answer for you. It seemed to be, again, we know the crypto market is full of leverage. So, simple note to any retail investor out there. So everyday people looking to get involved with crypto, please don't do so with leverage. This is one of those instances where you go and you take out a CFD position. And if you're long and this market moves against you, like what happened on Saturday, you get liquidated. And that's clearly what happened, because you had this slew of liquidations that occurred over that hour period, and it just pushed that market lower. So just to sort of explain the dynamics here, you've got a lot of people that go out there, they take out incredible amounts of leverage to enter the crypto market and they go long. So they say, listen, I think Bitcoin's price is going to go up. I think Ethereum's price is going to go up. I borrow some money from this crypto platform, this trading platform, and then you take this long position where you may have only put in, let's say, 5,000 Rand, but now you've got 200,000 Rands worth of exposure. And then all of a sudden, when the market turns against you, like what happened on Saturday morning, you are forced to sort of liquidate your position, and it just gets all these sellers into the market, and the market just collapsed. But then within a matter of hours, the market moved from a $42,500 low with Bitcoin and moved back up to $48,000, and now it's hovering around that $50,000 mark. So I mean, what a week. Like literally this could only happen in crypto, right? I mean, it sounds so scary to a lot of people, and it is scary, don't get me wrong, but rewind just 4 or 5 years and this was sort of the weekly occurrence in crypto. I mean, 10 to 15% moves in a day was just the norm. It actually just goes to show how much the market has stabilized. It's still a very small market. I mean, you're looking at the cryptocurrency market now worth $2.8 trillion, which is, certainly notable. But I think if you start looking at, the bond market, the stock market, there you're looking at hundreds of trillions of dollars in each of those markets. So we've got a long way to go until we're near there.
Yeah. And I think for anyone watching this, there's a huge lesson here. And I want to repeat that around leverage, because you get a lot of irresponsible platforms out there who are offering these geared positions into the crypto market. And ultimately, you can end up losing a whole lot more than any initial capital that you put in. And for a lot of people, that means potentially having to liquidate their primary assets, homes, cars, and that kind of thing. So this is serious. It's not really advisable for anyone to use leverage if they're a retail investor. This really is something that should be left to the professionals.
I 100% agree with that. One of my first jobs was working as a quant trader at a hedge fund out of Seattle. And the trading floor literally had a mandate to say, find the stocks, find the markets, find the trades where there are a lot of retail investors and trade against them, because you've got a lot of liquidity, right? You can have a position go quite aggressively against you. And as a hedge fund, you've got the dry powder to sort of play that position out. Retail investors, and I mean, speak with anyone that's played around with CFDs, and that's not even that much leverage. But then you start going to some of these crypto platforms and the retail traders, so the everyday people just get absolutely smoked. I'm yet to actually meet a very successful retail trader that hasn't yet been scooped up by a hedge fund or something like that. So I do recommend in any market, but in particular in crypto, not to trade with leverage. I mean, it's a risky thing to do.
And the only time we've seen retail traders really be effective is on the chat boards, our Wall Street bets, and when Redditors have gathered all of the retailers together, and that they can really move in concert effectively. But that is very rare. So if we look here at Bitcoin, and I know we've discussed this in the past, and that's why I know Revix likes to diversify across a range of cryptos, but Bitcoin in particular has been underperforming the overall crypto market. Do you have any thoughts as to why? Is this just a maturing of Bitcoin?
It's a little bit of Bitcoin falling behind relative to some other cryptocurrencies. So Bitcoin was seen as the version 1 in the cryptocurrency space. It was good at moving value from A to B. Actually, I mean, maybe let me not say that. It was all right at moving value from A to B. And then it sort of evolved more into the store of value like commodity that you could invest in, right? I think that's the argument that a lot of sort of institutional investors look at Bitcoin now with. And then I think if you start looking at some of the other cryptocurrencies, certainly the Ethereum killers or the smart contract focused cryptocurrencies, we've got a bundle that offers exposure to this theme within the crypto space. This includes the likes of Avalanche, which has been a star performer recently. Always mention a new cryptocurrency in the show. I think that's a new one there. Solana, Polkadot, you go through Cardano, sort of all these new cryptocurrencies that are emerging, but are looking to provide the blockchain architecture for other applications to be built on top of. They've picked up in market dominance exponentially. I mean, I think this year alone, they sort of increased 5 times relative to Bitcoin from their percentage at the start of the year. I think they're hovering roughly in total now, roughly around 30% of the entire cryptocurrency market. So that's including Ethereum and all the other players. So there's been a substantial increase in that sector. And I think that trend will likely continue. Bitcoin's actually interestingly trying to branch a little bit more into that as well, offering the ability for other applications to be built on top of its blockchain. So you'll hear talks, I think, going into 2022, certainly, of side chains. I'm not going to get into the technicalities of this, but where you essentially branch another blockchain off Bitcoin's blockchain and you're able to then build applications on top of it. So the likes of Lightning, which is a Bitcoin side chain, the likes of Liquid, these are going to be talked about a lot more going forward. But now that's getting into a lot of crypto jargon and really into the weeds in the crypto space. But I do think that you're going to start seeing some big challenges to the cryptos, to Bitcoin's dominance over the next while.
And it's always fascinated me because the whole philosophy around DeFi, decentralized finance, is no one really owns or controls these cryptocurrencies, and it's very open source, open access, transparent. But who decides then, if Bitcoin wants to start offering these side chains, for example? Can you just give us a very high level without getting too technical? How does that work? Who ultimately controls that process?
So it's quite interesting because you're right, there isn't these centralized teams that do this. So if you look at Bitcoin, and every cryptocurrency is actually slightly different. If you look at Bitcoin, there's sort of this core development team, and these are real Bitcoin aficionados, or what is the right term here? The Bitcoin bulls that really exist in the market. They sort of have a core development team, and they'll focus on improving the Bitcoin blockchain. Now, why? They've got a big vested interest. They're building applications that they're going to make money from on top of the Bitcoin blockchain. There's a couple big names that exist in that space. And then you've got other development teams that want to do things on the Bitcoin chain, but don't necessarily exist or don't agree with the way that the current protocol looks or how it works. And they'll say, okay, right, well, let's create a sort of side chain. And this is what's happened with Liquid and also what's happened with Lightning, where they'll say, okay, right, we can create something that's more scalable, that other applications can be built on top of, that we can engage with more market participants, and we can make money in our own right, but we'll be using this blockchain. And it's exactly the same sort of principle across all of these different protocols. Revix could come along as a platform and say, okay, right, we want to build our own sidechain on, say, Polkadot as an example, or we want to build our own sidechain on Cardano. We go then essentially fork that blockchain. We make our own modifications. We make it more scalable. We add nodes. We do all these different things. And then we look to market that to the general market and hopefully introduce our own tokens and make money from that. So it does get quite complicated. You have to get into the tokenomics of it. But it is generally, at least most of these projects are directed by a centralized source, and then it becomes more decentralized over time.
Very interesting, but clearly not just pure altruism or for the sake of building out this non-traditional ecosystem. It's because there's often value to be extracted from those additions that you might have in forking out and creating better scale or your better energy efficiency or whatever it is. Now, what kind of new investors are you seeing at Revix at the moment? Now, the last time we chatted, I said this was probably, it felt like a bit of a breakthrough year for cryptocurrencies. Is that coming through in terms of the new investors that you're seeing on the platform?
Oh, definitely. So we've recently launched Revix Private Clients because of the higher net worth individuals and institutional interest that we've received. Also, just a bit of context, after this drop on Saturday, which was this really steep, significant drop, we had the best 4 days of deposits in Revix's history by a factor of, I don't know what exactly the factor is, but a significant factor, 3 or 4 or 5. And we sat there scratching our heads going, wow. Yeah, exactly. Buying the dip. That's the philosophy. And the money that was coming in generally was coming in from these higher net worth individuals. This was their buying opportunity, right? So we're seeing a lot more of that, which I think is really interesting. And I've also got to say, we're engaging actively with various telcos, various banks in South Africa, right? Which is something 12 months ago I don't think was going to be on the table. So the bigger players in South Africa are actively looking at this, and they're saying, well, regulation isn't there yet, so we can't do anything, but we do want to be prepared that when regulation comes around, we can move forward. So I think that's sort of the big change that we've seen to prior years and all the rest.
Well, I was having a chat to David Gerald, who is one of the top kind of pension and financial services lawyers in the country, a partner at Bowman's the other day, about this decision, and we were chatting about it earlier as well, for National Treasury to effectively ban pension funds investing in crypto assets. And he thinks it's absolutely ludicrous. I mean, you're talking now about established traditional professionals, for lack of a better word, who are really starting to see the value in broader crypto assets, not necessarily just cryptocurrencies. Now, if we're to look at trends, and it's obviously impossible to say exactly what's going to happen to the crypto market in 2022, we don't have crystal balls, but I often have far more questions than I find answers to. But you keep an eye on a lot of the tendencies and the trends in the crypto market, and you can make an informed, kind of educated forecast here. What are going to be some of the biggest crypto trends in 2022 as you're seeing it from Revix?
So I think there's 3 big trends if we look out into 2022. The first is that there's going to be increased regulation, without a doubt. I mean, we pursued regulatory licenses in Germany, in Eastern Europe, being Estonia, and in the UAE as well. Those regulators have been really open to crypto innovation, and I foresee that happening in South Africa as well. I do believe the South African regulators will come around. It may be a slow start for them, so they still are trying to wrap their heads around this whole crypto idea, security tokens, all this stuff. It seems really weird. Also think, South Africa's kind of put itself in a bit of an annoying position, because you've got exchange controls, which kind of challenge the idea, or they definitely create a barrier to having sort of this open, free, global payment system, which is crypto. And I think that's going to be something that is going to be difficult to work through, but perhaps it will bring about the right sort of innovation in South Africa as well. And I think responsible innovation is very important. So that's the first trend that I definitely see happening early next year. The second thing is the NFT bubble that we're seeing. It is going to pop without a doubt. The idea of having $1 million rocks that are rather pixelated being sold, it doesn't make sense, right? It seems absolutely bizarre. If you haven't seen the NFT space, just go read about it. I mean, fascinating concepts and ideas. I think very much like the ICO boom that took place. But I do think that that's going to come to a spectacular end. That's my personal opinion on that. And then I think the third trend is the growth of DeFi. And if you look back sort of 18 odd months, I mean, this market was tiny. I think you had, in terms of total value locked within different DeFi protocols, roughly close to $1 billion. I mean, today you're looking at close to that $170 billion locked in DeFi. Big name institutions. I mean, Barclays Bank spoke about this on their last earnings call. JP Morgan had a research paper that just came out on DeFi. Goldman Sachs is talking about this. Big name institutions want to get into the space, and they're now looking for the regulatory certainty, which is coming around, and the sort of custodial solutions to guarantee that the coins are going to actually remain where they're supposed to be over the course of the investment. And that's all coming together. So I think just like sort of the growth of internet from like the early 90s to the late 90s into the early 2000s to the fiber line that we have today, that's the progression of the crypto space. And traditional finance is going to become interwoven with crypto a lot more. So I don't see crypto existing in a in sort of its own sphere and traditional finance existing in its own sphere. I think the two worlds are going to come together in a quite spectacular fashion.
The merging and the blending of those two worlds, and that it speaks to one of the challenges that I've always foreseen for cryptocurrencies to overcome, and that's policymakers, governments dragging their feet because they might see the opacity as only serving illegal activities or bad actors. And that's one thing about the traditional financial system. It's there to flush out illicit financial flows, funding terrorism, funding bad actors. How do you see that playing through in that trend of traditional finance getting into DeFi, potentially opening up the crypto world to a little bit more transparency? Because I still see that as one of the major hurdles that cryptos have to overcome.
It is a big hurdle, don't get me wrong. But I think when regulators start seeing what we're seeing as crypto platforms in terms of some of the tools that become available to you, remember, you've got these blockchain ecosystems that are completely transparent. You can see exactly where particular cryptocurrencies come from and where it's gone. Every withdrawal we make at Revix, we make sure that the address that we're making the withdrawal to is a whitelisted address. It's not from some illegal account or anything like that. It's the same for any deposits we make. When regulators start seeing that and the ability to track payments in that sense, I think they'll get more excited, because all of a sudden you've got complete regulatory oversight. With the current financial system, money lands up moving into cash. It disappears for a while. It comes back in. I mean, sure, you can say, well, banks, you're acting as the custodians in the space, but as the regulator, you're kind of sitting back and having to rely on the banks. All of a sudden, with the crypto world, you as the regulator can actually have a have a far better oversight of how the entire financial system's working. And I think that's a big benefit. So I personally think regulators will come around to it and they'll be excited. I mean, sure, there's new challenges, and the banking system has 150 years worth of tweaks to it, and the crypto market will need to certainly have some of those tweaks applied to it over the next while. But yeah, they're definitely coming together, the two worlds.
That reminds me, I mean, we're only talking here about a market that was formulated at the back end of the 2000s. Still very, very early days, and why it makes such a compelling investment opportunity. If you're getting in, you're still getting in pretty much on the ground floor of the crypto space. Now, you're running a great promotion to see you into the Christmas period, and hopefully we've got a nice little Santa Claus rally. So it's a higher Bitcoin price that I'd be predicting. Tell me a little bit more about this competition.
Yeah, sure. So if you head over to Revix, you can see all of our promo terms on the site. That's probably the best way to go about learning more about this, but it's pretty simple. You go about and you predict the Bitcoin price come the end of the year. The 3 closest Bitcoin price predictions, we are going to give away some Bitcoin cufflinks. These are not cheap cufflinks. They're £300, so super expensive cufflinks, and they're the coolest cufflinks you'll probably ever wear, especially if you're a Bitcoin nut like me. So I'd recommend heading over to the site, seeing the promo terms, and it doesn't cost you anything to make a prediction. Why not just go ahead and do it and see if you come right.
$58,542. That's my prediction. I've got it here. You can always come back to it. Sean Sanders, founder and CEO of Revix. Great pleasure chatting to you about the latest in cryptos and what we can expect next year. I'm sure we'll be sitting down and talking about this sometime in the new year. Have a great break.
Thank you very much, Michael. I hope you do too.
You've been watching Business Talk on Business Tech with me, Michael Avery. And we look forward to catching up with you in the new year. This will be the last episode for 2022. Whatever you do, stay safe out there. I hope you're surfing the fourth wave and not drowning in it. Take care.